Hello everybody, Steve Griffiths here, developer of the MT Predictor software program. In today's MT Predictor video, I'd like to follow up on what I was talking about in yesterday's training webinar about using the higher time frame support and resistance zones to help identify the larger degree trend. And I want to follow up on how the short-term 3-minute and 15-minute ES unfolded after our webinar finished, our training webinar finished yesterday. But as usual, let's go through the risk disclaimer first and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Also remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand that that losses can and will and do happen. More importantly, it's accepting that losses can happen. We'll be looking at a losing trade in the video as well. Right, this is what unfolded yesterday on a 3-minute chart of the ES. And during the training webinar yesterday, we were looking at these particular buy setups here, and as you can see, they were coming in and around our 15-minute or higher time frame resistance. For you guys who've been following us for a while will know we go out to a higher time frame chart to place our DPs on for support and resistance. If we're trading on a 3-minute chart, this will be the 15-minute chart. If you're, say, trading perhaps a 4-hourly Forex chart, you'd go out to the daily chart. If you're trading daily stocks, you go out to the weekly. So you're looking at a time frame between 3 and 5 time frames higher. Let's just clear this all off. So what I was looking at yesterday is this was the last swing into the low. There's the last major low. So we had a DP resistance off here, and as you can see, that was coming in and around the early part of trading yesterday. This is why in the training webinar yesterday I was saying that these particular buy setups were slightly higher risk and were probably ones to be avoided because of the resistance. It's a pity really, because this second one here did actually go up to the first target for a nice 6-hour profit. So that would have been great in hindsight, but of course we can't trade in hindsight. We have to trade on what we were saying at the time, and that was the advice at the time, that because we're coming off resistance, this may well not unfold as anticipated. However, a bit later in the day, if I go back to the 15-minute chart, we had a very clear picture, and that's what I want to do on the video now. See, the market then made a new pivot low on our 15-minute chart, then went up to make a new high. I'll just take this one off. And the point being is, where did this stop? Well, we go back to the last pivot high, which was here. We right mouse click, we do decision points. So can you see how the market then went up into 15-minute resistance on the 15-minute chart? So when we come down to the 3-minute chart, let's see how much or how different this looked a bit later in the day. So can you see now how this looks a lot clearer? The picture looks a lot clearer in that the 3-minute chart went up and made a high right at our 15-minute resistance. This nailed the high of the day as perfectly. Our MTP trend was grey, in other words showing us the market was in the process of making a reversal, but this is what was better a bit later on, or in around here, because the market then declined down, made an initial correction up. Our MTP trend was red. So can you see how these sell setups here were much clearer than what we had later in the day? In other words, the large trend was clearly down, both on our MTP trend and on our 15-minute resistance. There was actually a first attempt at a sell setup here. Can you see we had a little history triangle here? We keep these on the charts. You can see what would have happened at the time. And if I use our training mode and jump back to here, you can see there was a TS1 sell setup here. So let's place the analysis on. We'll move forward 1 bar, and you can see it was stopped out. Remember, I said right at the start, losses can and will and do unfold. This is why we use position sizing to vary the number of lots, contracts or shares, in this case risking less than 2% of a sample $20,000 account. So this would be what we call a 1R risk loss, in other words a 1R risk. And can you see how the history triangle was placed on the chart there, so we could see what would have happened? If I turn training mode off, we then got another sell set up here. We right mouse click, place the analysis on. This got you into a nice trade. Now the question being is, how would you have managed this trade? Well, our standard trade management guidelines say that when the market gets to the first target, which would have been here, on that bar there, can you see it? On the 1336 bar here, we go down to our MTP trend and we see whether it's what we call strong or weak. In other words, whether our MP trend oscillator is beyond or less than our strength band. These are our grey bands here. So on this bar here, if I come down, can you see how it just slightly exceeded? It had gone beyond our strength band. Therefore, this would have suggested that the market was strong, and the market was likely to trend further. Therefore, you should swap to our ATR stop, which is our red and blue dots, red in this case for a short trade, to manage the trade. And this would have been absolutely brilliant, because this would have held you short through here, held you short through here, held you short through here, just almost got stopped out there but not quite, held you short down through here, and then would have held you right down to this bottom here for an absolutely massive 18R profit. So if you'd been managing this with our standard MT Predictor trade guidelines, then you'd have held it short all throughout this large fall, and you'd have turned approximately a $300 initial risk into well, $5,400, or a profit of 18 times the initial risk. So an absolutely amazing trade. For you guys with a little bit more experience, you may well have not caught that, because if you go out to the 15-minute chart, here's our last pivot low. If you right mouse click, do DP, you can see that did put an area of DP support out here. Let's go back to our 3-minute chart and see how this may well have changed your your management. This, I'll just scroll in a bit so you can see it a bit bigger. Let's put the analysis back on here. Let's do this, and you can see that this 15-minute support was right in the area of the typical wave 3 WPT. This would have been considered a holy grail trade setup, because this was a major high, this was the initial move down, a wave 1, this would be the initial correction, subdividing with an ABC would be a wave 2, therefore the initial target would have been the wave 3. So I think most experienced MT Predictor users would have come down to this target here for, again, approximately, well, can I call it 7R? 6.9, 7R for approximately 7R profit. So that would have been a very good trade. And notice how 7R is much larger than the minus 1R loss. Again, that's why we use position sizing. Losses can and will and do unfold, but this would have been a minus 1R loss. This would have been a plus 7R profit. It then came into 15-minute DP support, and you may well have wanted to take this VS setup. If you did, you'd probably want to bring your stop to break even, because remember, the VS setups are volume backed ones, and if professional traders were indeed stepping in at this particular point in time, it should create a strong move off here, which it didn't. So this may well have been a break even trade, and again there was another potential trade in here as shown by this history triangle. So let's take the worst case scenario. Let's say that these were two losing trades, so that would be -1, and again our -1 back here. So even with these three losing trades, that would be -3R loss, but remember, this profit here would have been +7R, which would be much larger than those losses, so that would have been a good trade. But were there any reasons why, apart from the strong MTP trend, why the more experienced users may well have actually avoided these buys and then looked to keep short? Well, let's go out to our 15-minute chart again, and this is where I say MT Predictor is not a black box system. It's a system where you want to use some intelligence and basically analyze the market. So let's clear everything off here. Let's now place an Elliott wave count on here, and you can see that this was actually a 5-wave sequence going up into the high, which our DP support came in. So what do we know about markets as they move off a 5 or the end of a 5-wave sequence? Well, the initial target is the DP off the wave 4, which is here, which is our target we've been working on. We also know that if this is exceeded, then the market is likely to retrace the entire prior sequence. So if we go right back to here, place our DP on here, this would then be our next target. So as you can see, it gave the potential for a very large move if that initial support zone was breached. If we use some standard technical analysis and say we put a Fibonacci retracement on this entire sequence here, I'm just going to put on, change the properties there, so make sure the 50% retracement is on. So if this was indeed a 5-wave sequence, an initial rally, because we were looking at our daily chart, on our ES, and we noticed that we had some sell setups here on the daily chart a couple of weeks ago, and we're now down into this initial DP support zone here. So if we were going to get a meaningful support rally off this particular level, which we still might well do now, you can see we still haven't breached this significantly. So if there's going to be a major support off here, and we look at the Elliott wave pattern coming up here, if this was an initial 5-wave sequence, then we could easily anticipate a retracement into the 50% or 78.6% retracement of the entire 5-wave rally up. So as you can see, that was right the way down here. So the point I'm making is that this DP support zone was only a very small move. It wasn't even a 38.2% retracement of that entire rally up. So in other words, it was a very small move. So it could have been quite easy to anticipate that the market was going to go beyond that and then carry on down. If you want to keep on pure Elliott wave tools, oops, I'll just take that retracement off, and I'll just put our WPT on here, down for our wave 2RB, which is exactly the same retracements we did earlier here, just 2 clicks, and as you can see, that's our larger support zone there again. Again, that's way below where that larger degree 15-minute support zone was. So can you see what I'm suggesting? Even though this in this area here was at 15-minute support, that was only the sort of initial and minor 15-minute target after this 5-wave sequence here. So this could have easily anticipated that the market was going to go beyond that and then have a larger retracement down. So what does that mean when you were short on your 3-minute chart? Well, as you were short off this TS1 sell setup here, remember earlier in the video I said that our MTP trend was strong, so this was also hinting that the market had further to go. In other words, the market was strong and likely to run past targets. So the more experienced users, rather than wanting to come out here right at this initial target here, you may well have used our 80-hour stop, whoops, to then run that right the way down into the bottom there for that 18-hour profit. So I think it was a very good day for MT Predictor yesterday, a very good day particularly on these TS1 cells here. The ones earlier in the day we had back here again were slightly less obvious, and it's what I talked about in the webinar about there's times when markets are not as clear as they could be. So these setups, even though one of them worked nicely, would not have been quite so obvious, but this TS1 cell here, as I've shown, was very clear, very good setup, particularly as it came off our 15-minute resistance that nailed the very high of the day. The only question being is how you would managed it. So at the very least, I should think you should have come out with 6.9, a plus 6.9 or 7-hour profit at the first target, or maybe use our 80-hour stop to come right the way down here for a much larger profit. So either way, some very good setups coming in here and showing that it's best to only trade when the picture becomes clear, and hopefully this will be a good example to show you that those sell setups there a bit later in the ES 3-minute chart were very good, very nice setups, and were good ones to take.